Hello, fellow traders. Tis TheRumpledOne coming to you on Sunday, March the 5th. The year's 2023. Let's talk trading, weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And since we're starting, the first full trading week of the month of March, let's just make sure we have our risk management in place so we don't lose any more on any one particular trade than we're willing to lose. And a quick peek at the monthly shows you we're 12 pips above the monthly open, 55 off the high, and 109 off the low. So we're slightly green for the month. Notice we gapped down, but we filled the gap on the pound. Then Freddie on the euro gapped down, and that gap's been filled too. But we do have a few pairs where they still have a weekly open gap. We're putting in the opening range for the week. We are right or just 2 pips below the opening range for the year. And we are let's see, and just a few pips below. Actually, we're inside the opening range for the month here. For the year, we are 56 pips below the yearly open. And we are right at that inside bar low at, call it 34. That occurred 8 days ago, and we are in the inside bar for the week that occurred 2 weeks ago, and the inside bar for the month that occurred 1 month ago. So, and you can see here we've got plenty of inside bar action on the dashboard. Only 28 pips of range so far, no pairs over 100, and we're just about 8 hours into the trading day. You can see here we've gone up through the buy zone, filled that gap, came back down into the buy zone, then bounced a few pips. The weekly open sitting at 120.19. Not enough range for the rat zone. Notice we right at that weekly pivot, looks like we've taken it out already, and now we're reversing. For the daily pivot, we're 22 pips above it at the moment. And right there, haven't quite hit the daily pivot, but we've taken out the weekly, and we still haven't quite hit the monthly. In and out of that upper wick zone. Price doesn't like staying in the wick zone. And you can see here, 72% of the time out of the wick zone. Once again, 28 pip range, nothing to really look at the moment here. Looking at the price action, the simple price action chart here with the Walmart lines. M30 ranges are down. Normally we look at H1. We did have a nice movement 3 hours ago. And trading off the 3-level ZZ indicator using the highest low, lowest high. You can see here there was pips to be made going long at 120.308, and looks like prices going back up to put in a 2-ball. Looks like it needs to fill this imbalance right here. We haven't pushed the range really. And on the trade reminder, I don't really see anything that's standing out here. There was something I wanted to talk about. Oh, the price action simple. We've got this set at every 10 pips, but I was looking over the pound from what's been happening here, and I noticed something. When you get to this 25 level, you see how price has really been crossing that. That's one of those psychological levels. And sometimes if you can just wait for price to get near a psychological level, it's going to be a reaction. I mean, right here on the current bar, the low was 120.28.7, which is pretty near the 25 psycho number. And you can see how price, just look to the left, how price is pushed back from this level. So sometimes you just have to look at things and figure out what you're looking at. You have to see because rather than looking for something, just look at it and then interpret what you see. So right here you can see price just keeps rejecting off of that 25 area, and it just moves price right up to the north. Now one thing you can do, maybe I can just change its sweet spots. Just turn this to 25. And maybe that makes it a little bit clearer. And then look, same thing here at the 75. You look to the left, you see how it's pushed these 3 times, and it came down here, came right back and pushed again. Now, the double O or triple O, however you want to call it, you can see here that there's just a lot of crisscrossing action. And let's see if we scrunch the chart. If you look at the 50, it's the same thing. So it seems like the 50 and the double O, you get a bunch of crisscrossing. But when you hit the 75 and the 25, it seems like there's more rejections. But then again, we are looking at the H1 time frame. I'm sure if you drop down to M1 or M5, it might appear to be a slight bit different. But then again, not much crisscrossing there. But you can see here the difference. I always like to say price is the same on all time frames, and what that means is at the moment it doesn't matter which chart you look at. If the price is 120.35, that's what it is. The high of the day is going to be the high of the day, and the low of the day is going to be the low of the day. Doesn't matter the charts. When you get into things like indicator 2, or moving averages or RSIs or any of those oscillators, that's when changing the chart period changes things. Changes those values of those indicators, and they can throw you off. Sometimes it's, you can just keep things simple. What is price action? Well, what's price going to do? It's either going to stay between the high and low of the previous candle, or it's going to break out of one end, break out of the other end, break out of both ends. That's price action. It's either going to close above a line or it's not. That's it. You really can't simplify it from there. That's the essence of price action. But if you go watch other videos and go to different websites, trading forums, you probably won't find anybody that explains price action like that, because it's not to their benefit, because they're usually hawking something. They want to sell you their method, their book, their system, their indicators, their EAs. But no, the only thing I ever sold as far as trading is Drain the Bank t-shirts. People give me a hard time about the donational indicators, but that's donation. Plus I put out, I don't even know how many indicators I put out for free and still put them out for free. No donation required. But you can see right now, this is definitely slow time. Not much movement, not much price action happening. At least not on this pair. Maybe on some of the yen pairs might have a little more action, though I'm not really sure about that either. Let's see, yen. You got 68 pips on dollar at yen, 34 on the NASI, pound yen 65, euro yen 49. So you can see the yen pairs, Swiss yen, CAD yen, Australian yen. See, they're all more than the pound. So knowing you're in the Asian session, probably best to trade an Asian or yen based or yen pair. So, fellow traders, this week we'll probably continue along the lines of getting yourself out of jams. One of the things, I think we've mentioned this before, but it's okay to mention it again. Fix one thing and figure out a way to fix it. One of the things, I wrote myself an indicator, which I'll be sharing with everybody. Basically, time not to trade. So for me, I've got it set at 58:02. So if the hour is, X58 to the X plus 1:02, those 4 minutes, I'm not trading. Indicator comes up, has a big skull in the middle, big do not trade. Find something that'll prevent you from making the mistake. You can leave the room. You can write some code. Just figure out what it is you can do to just make sure you don't make that one mistake again. And if you can do that, if you can eliminate your mistakes one by one, don't try to do them all at once. But if you identify a weak spot, where I know if I trade in those times, more times than not, it just gets me in trouble, and then I got to trade my way out. So, fellow traders, just keep that in mind when you're at your trading platform this week. And when you're not at your trading platform, maybe figure out what's that one thing I need to stop doing or start doing that's a mistake. Let me correct that mistake, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.